job to generate interest in price, to suck in participants, right? The way they do this is through the power of three, which is not a new concept. And for the neophytes who think it's an ICT created concept, go study a bit more. It is an old economic concept, right? So go and read some books, right? Accumulation, manipulation, right? Distribution. Which again, I repeat, is not an ICT concept. It is one he popularized, like most of his stuff, right? Props to him. He's the mentor. Thank you, ICT, right? Mwah, mwah, ICT. Thank you very much. You're the mentor of the mentors. You're the best. But he did not create these concepts. Know your history, all of you, right? Now, he did refine them and combine them in one place, which is good. So good job on him. Nobody else did that, right? Gann, Wyckoff, supply and demand. He combined them all in one place, right? And made them popular. So without him, none of us would be here. I wouldn't be here. I wouldn't know this stuff, right? But know the history of what you're studying. Don't just blindly follow. Think and know the history. So, all that too. Explain the power of three. Accumulation, manipulation, and distribution. Now, what's happening over here in this pattern? There's always the market makers fucking someone over and somebody getting fucked over, right? Accumulation is generating interest on both ends of a range, a clear defined range. Now, this is where turtle soup is cooked, so pay attention, right? A clear defined range. It breaks through the range, grabs the liquidity, accumulates the liquidity from above these highs in order to distribute them below these lows, right? And then, of course, expansion in order to sucker in more participants. So they're generating interest on both ends. So breakout traders are looking to buy and sell a breakout, right? But breakouts don't occur the way that turtle traders think. They occur in a specific logic and pattern at a certain key level at a certain time. You combine them all together. You don't just blindly follow a pattern. Let me drink some water. Bismillah. You guys can take a break too. Have a drink or something for 1 second. So there's a logic and a pattern behind every move, and a pattern behind every price move. You should be able to explain to me, what's this price move do? What's the narrative and the context and the bias? Based on what? Right? You can't just blindly say shift, order block, FVG. Why? What is each PDA rate? Maybe in the future, I'll be dissecting. I've dissected the order block, right? I'll be dissecting each PDA rate and the logic behind each PDA rate, right? I've done the FVG and the order block, and maybe the rest later on. So, accumulation, manipulation, distribution. The purpose of a range is to accumulate and generate interest on both ends of the market, correct? And then trip one end of the range to the other, right? We'll see live examples, don't worry, for those of you who are critical of drawings. But the way to learn, for those of you who may have a slight subconscious issue, the way to learn is to first try the most basic concept and then build on it later on, right? You can't go and apply the most advanced concept without understanding the basic one. You can't go and trade a 1 minute chart blindly without knowing the higher time frame. So range, the purpose is to accumulate, generate interest, manipulate, and then distribute, right? That's a fucked up drawing. So what is an uptrend, my friends? Describe to me the logic of an uptrend. The mic is yours. There's only 20 people at the mic.
Price respecting
Consolidation,
British
expansion,
ADAs.
consolidation, expansion.
One by one. One by one.
I would
Price
say
is-
consolidation. Sorry, you can go ahead.
It's okay, man. Go.
Okay, I would say it's consolidation, expansion, in that phase. That's a trending market.
All right.
Consolidation, expansion, and replacement.
No.
Yeah. Any other answers?
In trending market, if it is bullish, it will be breaking highs and rejecting lows. If it is bearish,
Very
it will be
good.
breaking lows and rejecting highs.
What does that mean?
If I may. So in an uptrend, even though price is moving up, people will still be protecting their positions at swing lows. So
Those
before
people.
dumb money,
All right.
right? So they're always protecting and moving their stop loss up. So what the smart money will do is they'll sweep those lows to grab more liquidity and knock people off their positions before moving in the true direction of order flow.
Right.
And that's what keeps repeating until they're net short again.
Very good. That's the closest answer, right? Don't repeat patterns. Repeat a logic. And if you're wrong, dissect the logic, right? And you realize it's the same logic, which is repeating again and again and again. It's simply it's a matter of you being in sync or not, right? Because once you know the logic, once you know price, all of you, once you know price, then after that, it's simply a matter of being in sync or not, because you know how price moves, which is why the foundation was all about RR and the irrelevance, pretty much, of an edge, right? And then the next 7 hours talking about an edge, right? We have to be in the correct frame of mind. You have to think correctly. So, you are correct. Highs and lows can indicate to you whether smart money is net short or net long, simply by looking at highs and lows, rejecting highs, breaking lows, right? Example, we'll see at least 3 examples. Some old, some recent, more recent. So what's happening here to this low? What is this? What's happening here?
Rejection.
What's happening to this high?
Breaking.
What's happening to this high? Broken or rejected?
Broken, it's closed above.
Broken.
Very good. Again, a characteristic of a true breakout is an initial rejection followed by an expansion. That's a real breakout. That's how you classify whether it's a good retest, quote unquote, candidate for a continuation play, right? What happened to this low here?
Rejecting.
Right, so rejecting highs, right, and breaking lows. What happened to this low over here? This low. FVGs are lows, yes or no? FVGs on the lower time frame are swing low with liquidity below it. So what happened to this low? Broken or rejected?
Rejected.
There was a pause, huh? Rejection is the refusal to expand above a high or below a low, whether it's instant rejection or consolidation below the low or above the high, right? And because the price is breaking highs anyway, we expect it to continue. Discount low, right? Soup, boom. What happened to the high? Broken. What happened to the other high? Broken, right? Breaking highs, rejecting lows. Why did you choose this high, right? Choose the logical high, which will have a liquidity beneath it and above it, right? You can't just choose any random high and low. You can't just go and choose this one, right? But you can to target this low as a short-term trade, but as an overall market profiling, you choose the obvious, as you'll see, swing highs and lows, right? So what is this? Tells you that smart money is net long, right? What does that mean? That means they're accumulating below lows and throwing the positions above highs. What does it mean when they don't stop at this high? It means their position is so large that they need to go to an even bigger liquidity pool at a higher high, right? That is the logic of an uptrend, the explanation of an uptrend. As I said, every single thing is explainable. So, accumulating, pushing higher. Breaking highs, meaning they have a large position, we target the imbalances and highs, right? Turtle soup, right here. Good old turtle soup. Turtle soup. So this is a trend continuation turtle soup, right? The rule says in an uptrend where we are breaking highs and rejecting lows, we buy the dumps below the lows as turtle soup. All right? Now, in a downtrend, we sell the pops above a high as turtle soup. All right? We sell the pops. Any bullish pop above a high, turtle soup at once. Why? Turtle soup. So, breaking highs, rejecting lows, turtle soup, turtle soup, turtle soup, right? And then finally, we reach a long-term liquidity pool, which is the previous 6-month high. And over there, we start rejecting the high. So all during these 6 months, not a single high was rejected. Think about it. All during this uptrend, not a single high was rejected. And you can go and double check me on that. As soon as we had the first rejected high, when I told you I think in the market in terms of highs and lows, this is what I'm saying. As soon as we had the first rejected high and we broke the first swing low, then it was down from there. We broke the high, the low that broke the high, which means it indicates that smart money is not interested in longs anymore. They were refusing to accumulate, to expand below. They're protecting their positions, right? They have positions which they want to distribute to a higher high. To accumulate, distribute, right? Finally, they reject the high, suckering in people in this false breakout, in a false breakout. As we know, the previous week high, previous week's high, previous month's high, previous day high, right? These are all liquidity pools which offer valid bounces, short-term for you scalpers in there, short-term bounces, right? Previous candles highs in general. So liquidity pools, right? You have an old liquidity pool being rejected and now broken. So now we went from breaking highs and rejecting lows to breaking lows and rejecting highs. And that is the logic of a market structure shift. So think properly. They no longer have interest in protecting lows after a long 4 or 5 month uptrend. They broke it, which means you can safely assume after taking out liquidity pool, turtle soup, right? So you can safely assume that they are net short now. And any bullish pop above a high is turtle soup. Turtle soup right here. Turtle soup right here. And here comes a quiz. Here comes a trick question. So, what do you see over here? The mic is yours. Let me go and allow some other people. Maybe you got some interesting folks hanging around. So what do you see? Krishna, let me allow this guy in. Allowed to speak. What do you see over there?
Price broke highs.
Speak, raise your hand and I'll let you speak. Don't DM the poor guy. Just raise your hand. And you'll have answers. You'll have a chance to ask questions anyway afterwards, right? So don't worry. You will have a chance to answer the questions anyway. So what's happening here? Up here. And before you say that, what do you see up here? As we speak right now, what do you see? All of you, what do you see? Focus and be honest with yourselves. What do you see?
Price.
Market structure shift.
Beautiful. Excellent. Anyone else?
Yeah, price broke highs, a market structure shift, and a fair value gap.
So bullish, right?
Correct, yeah. Should be with that
Bullish?
logic, yeah.
Bullish targeting these equal highs, right? Bullish buy now. Where's your stop loss here? Because when you think about price, here's another thing. When you think about price and trade idea, always think in a stop loss, right? Because otherwise it's useless. You're pretty much not trading. So when you say price is going up there, always have an invalidation in your mind, whether mentally or written down. Right? That's practice for execution, practice for stop loss placement. So we were saying, where's the stop loss right now? Where is it? Down here?
It shouldn't be anywhere near that.
Here? Good.
We're trying to buy at the high end of a range and into a weekly order block.
No. That's you right now. But I'm saying, what does the average... What do most of you see, if you're being honest with yourself right now? Someone said a break in...
Okay, just on
Break
this chart should be the below the bullish order block to the left. A safe,
Right.
stop loss placement.
This is a breaker. What do you mean? This is a breaker.
Oh, actually, yes.
High, low,
Yeah.
low, high. So it's a breaker. Well, why are you bearish? Let me dissect your thought right now. Come here. Why are you bearish over here?
Yeah, without further information, it would be bullish, clearly.
All right. So anyone else? So you'd be bullish because of the pattern, right? Pattern, bullish. Anyone else has an answer as to what is this?
No.
As price taking lows and breaking highs on the previous, I think it's on March.
All right. So
No.
are we breaking highs?
Wait.
And are we rejecting lows?
No.
Yeah,
I
we
think,
are rejecting lows. Sorry.
Even though there is,
Into the lows.
even though there is a market structure shift, we have to always look whether the price has tapped into the higher time frame liquidity pool. Then we can confirm that the market
Alright.
structure break is
All right.
valid.
First of all, we're above a liquidity pool. What's the rule say? It says never buy high and never sell low. That's rule number one. Right? Every single one of you who lived this live would have considered at least a shift in structure, right? At least considered it. right? Just to keep you guys happy, right? You'd have considered a shift in structure with this breaker and FEG, whatever. But rule number one would save you. Rule number one would have kept you safe from this wreck, right? Which is never buy high, never sell low, buy low, sell high. Now, you blend that in. First of all, let's measure. How do you measure high and low? How do you measure high and low?
IPDA.
And
IPDA.
the dealing range and the expansion leg, right? Just a visual look. The two important ones are these two for me, right? 1 and 2 is more important than not iPad, IPDA. So count back 20, 40, 60 candles. Are we high or low right now? If you count back these candles.
We are in the high.
Exactly. 20-day high. Right. 40-day high. 60-day high. We're high. Now, dealing range, high or low? Are we high or low?
High.
All right. The expansion leg, the swing low. Are we just visually, roughly? Are we high or low? So you have roughly, and you have a measurable, quantifiable way, right? So we're high in all three ways, right? Now, if you're in doubt, because obviously price doesn't look the same, it looks similar, but not the same all the time. So if you're in doubt, then always, what do? When in doubt,
Stay in the higher time frame.
when in doubt, zoom out. Right? So delete all of this shit. One week. Now, what do you see now? Are you still bullish on a shift in structure? I draw this, and it's in my mind. I don't need to draw it, just for your it's for you guys. So, what do you see here? And shout out to Day. He was here to call this one live. So, we were saying, are you bullish or bearish here?
Bearish.
All right.
Yeah, bearish, clear as day.
Why? Clear as day now, right?
Yes, always with a higher
Lows.
higher time frame.
Lows, and now we have a bullish pop above a high. Plus, you have this order block, clear as day, right? As you said. So, if you're still in doubt, zoom out even more. Go to the monthly. What does the monthly say now? Up here. Bullish or bearish?
Bear.
The monthly candles or data ranges?
I wouldn't trade this.
Then you'd be wrong. Because it's digging into a monthly FVG, right? And a weekly order block while pushing above a high. And as we said, the rules of the market profiles are when there's a bullish pop above a high, you go and validate the bullish pop with a higher time frame PDRA, and you smack it back down, right? So you have the higher monthly, bearish.
And
So
this
if you wouldn't trade this, you don't. It's because you don't understand price in this situation, right? Who was that? Who said you wouldn't trade it? Who was it?
FX21.
Nah, come on, man. You should have traded that because it's a clear bearish order flow, right? This order block is broken, right? Let's probe order flow. Let's go and probe the order flow. Order block broken, right? FVG, this FVG over here. This little shows an imbalance over there, right? It's a fairly small one, but still. Order block broken, FVG broken. Plus on the weekly, it's a clear as day. Clear as day, pun intended. clear as day. Downtrend and a market maker sell model. Yes or no? Now look at when I'm employing the market maker sell model. When the logic is right. Right? Is this not UFX21? Is this not a market maker sell model? You tell me. Right?
Yeah.
So the market maker sell model is the draw on liquidity. So when you ask about draw on liquidity, the market maker model is a draw on liquidity. It tells you what to do, right? So we're breaking through bullish PD arrays and we're respecting bearish PD arrays. Yes or no? This FVG, IFN over here, right? We're respecting bearish PD arrays. Why would we not trade it? And we have bullish we have a bullish pop above a high in a downtrending market. So why would you not trade it?
I'm not saying you're wrong. I'm saying if I was looking at this by myself, yeah.
But I'm saying you're wrong. Because if order flow is bearish, then why aren't you selling? Right? You tell me, am I wrong? If order flow is bearish, then why are you not selling?
If I was looking at this by myself, it would be in the middle of a range, and I would be afraid to trade it. And that's just
Very
being
good.
honest.
That is an excellent point you brought up about ranges, but which I agree with, by the way, right? Range trading, which is the next after the trending markets, the ranging markets. Range trading, you never trade in the middle of the range, right? But, however, tell me the reason, by the way. Tell me why don't you trade in the middle of the range? FX21.
It's neutral.
No, why don't you trade in the middle of the range? What are you afraid of?
I'm just not sure.
All right. Any other reason?
That's it.
Because you expect chop, right? In the middle of the range?
Right. And whenever I see he talk about middle of the range, I think that he usually don't do anything. Wait for more information.
For me, the monthly and weekly, right? They're all more than enough. And if you look at the power of 3 candle on the yearly chart as well, right? Is accumulation, Q1, manipulation, and distribution, right? January, February, March, April, right? Started the topping process towards the beginning of April. Then it just tanked, right? Plus the market maker sell model, plus the range high. Talk about ranges, right? What's the target after you purge a range high? FX21.
Internal range liquidity.
And
Middle of the range.
the other end of the range, right?
Original
I'm not sure if I see.
consolidation.
I'm sorry.
No.
Coffee.
Basic range trading. And you can go back to this, right? When you have a range, which is the next topic, but you pushed me into it, so whatever. When you have a range, which is my bread and butter, right? So when you said range, you caught my attention, right? You have a range and you purge either end of the range. Then what happens? Generating interest, right? Generating interest up and down. So there's liquidity building up and below, correct?
Correct.
Yeah. Building. So when you have this liquidity building up and below, and you purge the range low, then all this liquidity you've built during this while is still built up there, right? So the logical target is going to be the range high. So whenever a range low is purged, I have 2 targets, right? And I've dissected ranges to no end. Target 1 is the high that caused the purge. Talk about targets, right? And so it's going to be something over here, right? Somewhere over here on the lower time frame. Move this shit. Target 2 is 50% of the price leg of the range, and target 3 is the range high always. So when you see a range low being purged, and the range high has not been purged, then you can reasonably anticipate target 1, 50%, target 2, range high, right?
Correct.
So based on that logic, right now, right here, purged, right? I'll show you the logic right now in a live call I made. So it's not some hindsight garbage, right? Range high, purged, target 1, the low that caused the purge. This is a high quality target, right? There's an extremely high chance that it hits the target. And target 2 is the 50%, so 2 before 1. And target 3 is the range low. So I'm finding, when I see a range, a clear defined range like this, right? I'm waiting for one end. Have you seen my turtle soup, by the way? Which I call on Twitter. Have you seen the ranges I call on Twitter?
For this one?
No. Have you seen the ranges I call on Twitter in general?
I'm not sure which one you refer
Okay,
to.
so you haven't.
I haven't gone through all of your tweets, to be honest.
All right. I might forward it right now if I find it real quick.
Thank you very much. Thank you very much.
When there's a clear defined range, right? What does that mean? A swing high, swing low, and it's mid range, right? Then I'm waiting for one end of the range to be purged, and then I have a trade ready, right? As soon as you purge the range, I have a trade. That's a system. That's a model for you. That's my bread and butter model, right? Which is range, wait for a purge of one side, and then you have two targets. Target 1, 50%. Target 1, the low that caused the low or high that caused the purge. Target 2 is 50%, and target 3 is the opposing end of the range, based on the logic that the liquidity was built: accumulation, manipulation, distribution. Right? That's what it is. What's a range? A range is accumulation, manipulation, distribution. Right? So we have accumulation here. Accumulation, right? So what are you waiting for now over here? Either end to be purged, right? For a trade to form. Accumulation. Now a trade idea has formed. It's presenting itself to us, right?
So at this point, you already know that you're about to enter a trade, right?
I know that I'm going to enter a trade targeting 50 and 1. I'll show you a live call, right? A live example.
Gotcha.
Right now, right? That's what I'm doing. At this point, as you can see, accumulation, manipulation. I'm expecting distribution 1 and 2, right? You blend that with a higher time frame PD raise. You blend that with time. You blend that with market profiles, and you get a pretty clean read, right? I'll show you right now. Another example. Let's finish with this one first. Right? Accumulation, manipulation, and then distribution. I'm in the trade, right? 1 done, right? And then, of course, we expect the 50% to be a chop fest, right?
Correct.
And then, of course, a bullish pop above a high in a downtrend. You see how I'm blending market profiles with it? Is to be smacked back down. And
hey, Romeo, your cursor is lagging a little bit, so it's hard to see where you're pointing at.
How about now? You see it now?
I don't see your cursor right now. Am I tripping?
Do you see the screen?
Yeah.
I don't see the cursor either.
Do you see Bitcoin at the range low?
Lag.
Do you see the Bitcoin? Yeah. Do you see Bitcoin at range low?
Yes.
That's all that matters, right? As you know that accumulation, manipulation, distribution. This is a classic range play, right? So price is always in a range, trend, consolidation, expansion. Let's lock this shit once. Lock. Consolidation. Consolidation, expansion, consolidation, expansion, consolidation, small candles, consolidation, expansion, consolidation, and expansion. Always, right? So consolidation, turtle soup, expansion. Power of three. Consolidation, turtle soup, expansion. That's how I see it. Consolidation, turtle soup, expansion. Validating it with market profiles and validating it with higher time for PD arrays, right? So
Hey, is the stream laggy for any of you guys?
No,
it's
it's
lagging.
fine.
It's
no,
fine.
it will be fine on the recording. It will be fine on the recording. It's not lagging on my part.
Gotcha.
Your connection, my friend. So,
but in this case, for the high of Bitcoin, there was no higher time frame PD rate, was there?
the higher time frame PD array is the liquidity pool of the past 6 months. When I say PD array, right? Go through the PD array, the matrix, the hierarchy. Find old highs, old lows. Yes or no?
Yes.
That's correct.
Exactly. So old highs and lows, right? That's the way I view the market. Highs and lows, market profiles, and higher time frame PD arrays. That's the combo, right? So, that's pretty much this. This was a beautiful range trade, right? This one as well, right? Check this out. A range within a range. Range high, range low. Yes or no? Range high, range low. When you think in the range and the profile, then this is not a shift anymore in your eyes, right? You're in fact bearish up here. You see how the logic changes, the way you think, right? So think in profiles and ranges, right now.
Romeo, but what if, say, like when you were watching the market in November, at that point in time, price was still extremely bullish, right?
What?
In November, when we saw price, wasn't the order flow still extremely bullish? So
no, because order flow changes, my friend, right? Order flow switches at certain points in time and at certain liquidity pools and at certain standard deviations, right? It flips from bullish to bearish or vice versa, right? So it can only be bullish until it's not, right? How to measure that? You have a bunch of tools. One of them is a range high. A range high is, let's write down the rules of range trading. Most of them. Again, buy low, sell high, right? Goes without saying. Buy low, sell high. So buy range low and sell range high, correct? Or if you're not sure, then never buy range high and never sell range low. With exceptions, because when you do this, you're being a breakout trader, right? The only time you can be a breakout trader is when they create a PD array at the range high or low. Write that down, right? The only breakout trade you're allowed to do is when they create a PD array at the high or the low, like this one, right? Range high, range low, right? Apply the rules right now. What happened over here? Accumulation, manipulation, distribution. They gave you a PD array at the high of the range. That's a real breakout. You don't buy the range high. You wait for the retest, right? Is my voice and video clear?
yes.
Yes.
Right.
Yes, both are clear, mate.
So I hope that answered your question, my friend. More rules of range trading. Never deal with price in the 50% of the range. Right? Another one. When we take never long after a false breakout. Never long after, this is for Zlatan, You remember? You asked me? Here's the answer. Never long after a false breakout for range, and never short after a false breakdown for range. Because more likely than not, we have changed, we have shifted, whatever you want to call it. We're now trending from bullish to bearish or vice versa, right? Excuse me. So, and of course, the 50% is a very sensitive area. It can be used as support and resistance. There's some other rules, right? Some more deep details. But as an introduction to range trading, this is an excellent one, right? And as I mentioned, those of you who took notes, remember that I said we expect a stop run when? Where? At
Range
what
high, low.
price? No. We expect
At
a stop
50%
run
of
for
the range.
Exactly. And look what happened over here. Exactly at 50%. I'll show you more examples right now, right? But exactly at the 50% of the range, you get a stop run, and it tanks, right? So.
Like I still don't see how you could have trusted shorting right at the high of November though.
That is why I gave away this. First of all, it's tape reading, right? Because every stop run happens within a deviation. That's how you catch daily highs and lows, right? CBDR. What is CBDR? It's you trying to predict the high or low, right? What is London high of the day? What are you doing? What is London low of the day? You're trying to catch the high and low, not randomly, not just shorting anything, not just coming here. For example, a mistake you might make at the beginning is shorting this high, right? Why is that incorrect? Why is it incorrect to short this high? That's a quiz. Tell me. Turtle soup, right?
Because like in the range, you'd say it's at 50% or kind of in a premium.
And we're breaking highs and rejecting lows. That's the key point. So when we're breaking, and what you did was a mistake, my friend. You mistook a ranging market for a trending market. And that is the biggest challenge, write this down. The biggest challenge as a turtle soup trader is differentiating between ranging markets and trending markets. The only two things that can help you are a higher time frame PD array and chart time with the concept, right? You follow? And again, a depiction of the market maker of the shift. You remember I said a real breakout doesn't allow you to enter over here, right? Shift in structure, break, bearish here, below low, retest, and then continuation, just a side piece. Anyway, we were saying that you trust the high using a higher time frame PD array, using time. That is a key element, which sadly I won't be going through this one, right? Using time, using a higher time frame PD array, and using deviations, right? And chart time. Those are three main things which will help you differentiate. And of course, it goes without saying, the market profiles, right? Those are four main things. Write them down. Be more arranged.
But in a daily time frame, where would you measure the deviation from?
Previous ranges. I'll let you figure out that one. Because time and price are fractal, right? So the same thing you do with an Asian range or a flout or CBDR or whatever, right? You do it on the higher time frames. So the way you trust, here's another one. The way you trust a turtle soup is higher time frame PDRA. Market profiles. This is crucial. Market profiles, time, and chart time. Time as in the axis, and chart time as in tape reading. So we have reached the limit, but I'm gonna keep going anyway because there's still some stuff left, including the entry. So for the guy who was asking, what's your name, by the way? Who are you?
Hopium.
Hopium. All right, Hopium. That's why I said we have 3 entries, remember? Before yesterday. As turtle soup traders, we have 3 entries. Number 1, turtle soup. Number 2, order block FVG. Number 3, OTE/breaker. And I hope someone's recording the whole thing. Does someone have the whole thing? Let me go check. Does somebody have the whole
Yes.
The whole thing, huh?
Yes.
Yep.
Well, not the
5 hours
beginning,
and
like the first
20
hour
minutes.
that the bonus
The first
one.
3 hours was a bonus, right?
I don't have the bonus.
All right, it was irrelevant. All right, so I have 2 people confirming that they have Lars and Rip. All right, buddy, thank you. So
Romeo, when you said you wouldn't be going over time, is it only in this lecture or you won't be talking about it?
we finish soon, my friend. Time,
No.
again, I will direct you to the videos of ICTs where he talks about it. I'm not gonna go into stuff. So you can go to his videos, and I gave you a representation of the open, high, low, and close. That's all you need about time. I believe that everything past that is noise, right? 1, 2, 3 trades per candle. That's all there is. Open, high, low, close, and an OTE in between, right?
Okay. Thank you.
As I said before many times, my Twitter and my YouTube. I didn't show you an example right now. So, moving on. Range low, range high, right? Over here as well. Check this out. Let's go to ES. Let's go to something more modern. Right over here, right in ES. Now, be honest and tell me, what do you see? Every one of you sees a market structure shift. Yes or no?
Yeah.
Am I mistaken?
No, you are correct, mate.
I mean, by definition, by the pattern's definition, it is a market structure shift. Yes or no? So, how would you filter out the fuckery that happened later on? Why did this happen? Why did this?
I actually remember this.
Why did this
during the 2022 mentorship?
Why did this market structure shift fail? I remember it too. Why did it fail?
The only thing Michael said was because we had a swing high form above the equal highs at the left in May.
Very good.
And a seasonal tendency.
The swing high is the closest, is one of the earliest indications of a top or bottom forming, right? A swing high is the closest indication of a top or bottom forming for a specific reason, which you can go figure out by yourself. So, why did this happen? What's rule number 1? What's rule number 1?
Don't buy highs.
Buy low,
Don't
sell
sell
high.
lows.
Buy low, sell high. buy above highs. No, definitely not that. Buy below lows, sell above highs, right? And don't buy above highs and don't sell below lows. So keeping this in mind, what would you be doing right now?
You shouldn't be buying.
Like live the moment. This is price right now in front of you. What would you be doing to the price? You shouldn't be buying. That's one answer, right? And
we will look to sell.
Or not buy it. So the rule, if it doesn't make you money, it saves you money. That is crucial, right? To know when to be neutral or to know when to not be something, right? Now look at this market structure shift. But before we dissect it and see why it happened, right? See maybe one more example of the concept. We've seen a bunch of examples. How do you measure high and low?
20-day if the rate. 20, 40, 60 day if the range.
Right. High or low? 20. Count back. 20, 40, 60. Are we high or low?
High.
Visual. You can tell straight away, right? if you want to really be picky, as some of you probably are, because in 1,000 people, for certain, there's going to be 1 or 2 picky people. There's 60. Pretty high. Yeah, you're definitely not low. So that's measurement number 1. Measurement number 2, the dealing range. Are we high or low? It's actually an OTE, right? Are we high or low?
We are high.
All right. So 2 boxes ticked. And the expansion leg, the swing low that we're rallying from, the bottom that we're visually rallying from, high, right? As I said before, the first 2 are what matter more to me, right? The third one is just a bonus, just a rough look. I don't even know why I'm mentioning it, but it's there. Third wheeling. So this alone with those measurements allows you to put a sell, right? Or not buy. So if it doesn't make you money, it saves you money. Now, blend this with this market structure shift happening at open the weekly, excuse me. What do you see on the weekly?
A SIBI that was almost traded to previously.
There you go. All right. A higher time frame PDRA is more important than a lower time frame market structure shift, correct? The concept is constantly happening again and again and again. A higher time frame PDRA is more important than a lower time frame market structure shift. So that is how you invalidate. When I said when you see a shift, validate it with a higher time frame PDRA, right? So you'd be selling there, right? And it would have been a fruitful endeavor. Now, this is also a range, yes or no? Everything blends together, and you don't have to know everything. You have to pick one that resonates with you and make it yours, right? So this is a range right now. Am I wrong? Am I right? There's only one correct answer, right? A range. The first breakout for range is almost always a false one, all right? That's another rule of the ranges, which I didn't mention. The first breakout of a range is almost always the false one, if not always, right? So blend that with buy low, sell high, blend that with the PDRA, blend that with the measurements of how to measure high and low, and you will definitely not be buying up here. You will be selling or not buying. And the beauty is, after we see, excuse me, after we consider rule number 1, we check for a market maker model. And do you see it? So the market maker model is the range low. The first breakout. The range is going to target, what do we say, FX21. There is a stop run that happens at the 50%, correct?
Correct.
What happened here? Stop run, right? Always. There is a, what are the targets of range trading? Target 1.
50% and
Target 1 is the highest,
lower
highest,
high.
the most likely target is this one, right? The low that caused the purge. That is almost guaranteed, right? That's you'll always find a trade if you target only this. Target 2 is this. Target 3 is this. Always. All right. So let's apply it. Let's apply profiling markets to a more recent price leg. Just to keep up with.
Hi, Romeo. Can I ask a question?
Tell me.
Okay. So can you explain a little bit more on how we want to spot that as a useful range, because there are so many swing highs and lows?
Very good. Excellent question. That is a beautiful question, and I thank you for it. Now, because I was going to leave it to y'all to study and trial and error, which is the best teacher. But you asked, so here you go. What do you see here, by the way? What do you see over here? I'm trying to get to the real live calls, but you're pushing me to show you hindsight. So there you go. What do you see over here?
I see that the high keeps rejecting and breaking the lows.
What? No. Right. At this point in time, what would all of you be doing? The answer is for the mic is with you.
Market strategy shift.
Of course.
Okay.
All right. Any other answers? We have one shift. Any other answers you have?
I would have thought since the market rejected the previous high, it was going to continue lower.
No, forget about me, and forget about what you learned today. In general, what are you thinking? When
this is what I would have thought.
Yeah, it's bearish.
Exactly, and you'd get wrecked. And just to rub it in, the market would use your stop loss, which would be here, as a support level, right? So that is not a correct way to think. Now, instead of thinking in market structure shifts, first of all, what's rule number 1?
Buy low, sell high.
Are we low or high? What are the measurements of high and low?
It's low, I think 20 days low.
68 candles on the weekly. 1, 2, 3, 4, 5, 6, 7, and 8. Right? So we're low. Dealing range, we're below the dealing range. Right? This was if we were bullish, we'd have an OTE over here to continue, right? We broke through. Took out a liquidity pool. What's the rules of trading highs and lows? Never sell below a low, right? And never buy above a high. And you can see here why. That rhymes, my mistake, right? Yes or no? So rule number 1 would save you from being bearish down here, right? Now, how do you validate or invalidate a market structure shift?
Time frame.
Who was the person who said he's going to sell this bearish shift? One of you. Was it FX21?
FX21, yeah. I said it looks bearish.
All right, excellent. It looks bearish. Now, confirm, think of it as a confirmation process, right? Confirm the shift with a higher time frame. So look at the monthly right now and tell me, do you still think it looks bearish? Right down here. Does it look bearish to you right now at this point in time? Is it bearish or bullish?
If I were looking at the market by myself, yes.
Bearish or bullish?